Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at Polkadot. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one. It's going to be linked in the top right hand corner of the screen. Now, let's jump straight into the TA. We are on the daily chart, and as you can see, we are seeing a crash across the markets because of the news coming from the Middle East, obviously, with Israel getting bombed, and markets are dropping like crazy. Bitcoin, not as much, to be honest with you, but altcoins are seeing heavy pullbacks. For example, Polkadot, from the local top there from March, we went down approximately 52%. Now, this is an incredible opportunity for anyone who tried to get into Polkadot to get more coins, send them into staking if, of course, that's what you're planning to do. As you can see, we had a Fibonacci retracement set up from the low in January to the local top from December last year, and we managed to get to the 1.618 perfectly. We perfectly got to the technical target at $11.62, and from there we started retracing back down. It looked like we were going to hold the 786, but with the recent news we had a crash, and this crash, to be honest with you, is very reminiscent of the crash we had before the halving in 2020 with the coronavirus dump. So, you know, I'm not saying that we're definitely going to go up. I'm not saying we're definitely going to go down. I'm not here to give you predictions, but this is when you should be, in my opinion, capitalizing on the opportunity, because if you know where the markets and where crypto and Bitcoin are going in general in the future, there is no reason why you would not be buying these prices, because when we were rallying and the prices were sitting at 10, 11 bucks, everyone was asking for cheaper prices. Everyone wanted to buy the cheaper prices. When you do get the cheaper prices, you're scared to buy. So that's, you know, that's very inconsistent, and those people usually won't make any money because they're very emotionally driven. So this Fibonacci retracement still hasn't been invalidated. As long as we close the candles above $6.29, we should be good to go. And the weekly chart as well, we should close the candle above this local low. I really don't want to be losing it because this was our support from where we saw a move to the upside. So hopefully this will be a nice double bottom pattern for us, with the neckline being there at the 1.618. If we continue dropping even lower, let's see what our potential targets are going to look like. So immediately you have this support block, which was the previous resistance from July 2023, from November 2023, and then we broke above it in December, and we haven't seen a back test of support. We did wick down there at $5.70, all the way down there to that block. So hopefully we can pick up some liquidity from there. And that's also where the 1.272 is on the Fibonacci retracement we just set up with the targets to the downside. Then you have the 1.414, which is also an area where we have set up a support block. And this is based on these touches that we had in June 2023 and in November 2023. So it's possible we might go even below $5 if this crash continues. That's very likely. And of course, you have the 1.618, which is also a very important level. I did not even look how the 1.618 perfectly matched with the trend line that we had on the chart. So it's essentially these lows from June 2023, January 2023, and then a few back tests of resistance of that area in 2023. So those are the levels you can be targeting. You can set up some buy limit orders in advance. Personally, if I did not have any coins yet, I would be filling my bags at $6.41, to be honest with you. Like, there's no reason why you wouldn't be doing that. And that's for the daily chart. If we take a look at the RSI, I mean, look at this. We're in the oversold. And the last time we were in the oversold was back here in October 2023. So make sure you decide for yourself whether you want to be, taking advantage of these dips, or you're going to be scared. If it's the latter, then, that's still okay. You can do whatever you want with your money. But for everyone else who is trying to invest long term, then these are great opportunities. So let's switch over to the weekly chart. And before we continue with the video, I want to give a quick shout out to my Patreon. If you're interested in getting more exclusive content, you want to support me as a creator, and you like what you're seeing here on YouTube and you want more, feel free to check out the Patreon. That's definitely a place for you. There's a 7-day free trial, which means you can get access to all of my content since the inception of the page. So that means you get podcasts, low cap gems, technical analysis, project reviews, and a whole bunch of other stuff. We try to do posts there on a daily basis. We cover airdrops and a lot of stuff that we don't really cover on YouTube because we don't have as much time. And of course, because patrons get more stuff and more content. And if you're interested in that, the link is down below in the description. Thank you all. Let's continue on with the video. So we're on the weekly chart right now. As you can see, we lost the 20 and the 55 EMAs. And that's not a very good sign, to be honest with you. However, I don't think we're going to be staying there for long. The idea is that you don't want to get a bearish cross. So for example, if we continue going down for an extended period of time, then the EMAs are going to have another bearish cross, which is not what we want to see because we just had the bullish cross on the weekly, which is a bull market confirmation. And we started printing higher highs as well. Things were looking very, very good. So we're hoping that we can just stay below the 55 temporarily while the EMAs catch up together. And then we have a reversal in the price action after the halving, and then the EMAs continue going upwards. That's what we're hoping for here. Regardless, Bitcoin is still far away from the 20 EMA on the weekly chart, so we can continue dropping until $55,000 and we're still going to be bullish. So by that time, altcoins can absolutely dump even back down to their October 2020-23 lows, because we did not think that was possible, right? And technically speaking, we did break above the August 2022 high, but we failed to hold it as support. So we're back to square one with Polkadot. We're back below the major support levels here. And the only hope is here, once again, is that we hold this low, is that we close the weekly candle above $6.30 on the weekly chart. And obviously, worst case scenario, we want to be holding this low. Like if it gets absolutely crazy in the markets and you know it's gonna, and Bitcoin's crashing back down to 50K, then you definitely want to be holding this low here. Because if you start losing that, then of course we're in a continuation of this bear market, and that was just a fake out. So that's what we have for the weekly chart. And taking a look at the RSIs, look at this. We got overbought multiple times. Now we're coming back down. And as you can see, we did break above this trend line. So maybe expect a retest of that trend line, of that teal trend line that was a resistance previously since November 2021. And now it flipped to our support. So we want to see a bounce from that area. Let's take a look at the MACD here. Okay, so we are getting a bearish cross in the MACD. Usually once we get the bearish cross on the MACD, let me take a look at this bearish cross. Look, so this was back in November 2021 on the weekly, but that was the bull market peak again. That was the bull market peak, and that was at $32, and we ended up dipping even lower. Obviously, we went down to $3. And during the bear market, whenever you had a bearish cross, it typically didn't take long for us to flip and have a bullish cross afterwards. And considering the fact Polkadot was kind of in a sideways range here for a very long time, the MACD isn't the best indicator to look at. It works really well when you're having impulsive moves to the upside or you're having corrective waves to the downside. Then we can start looking at it a bit better. So here we had a bearish cross. Usually, once the bearish cross is in, you should start looking for the bottom relatively soon. If we're not at the peak of the bull market, of course, which we are not right now. So usually, you get the bearish cross on the MACD, and then you start looking for a bottom sometime soon. Hopefully, that's going to be around $5.50. From there, we start moving to the upside. As you can see, in 2024, we started getting more volume, and that's really, really good to see as well. The stochastic is back down in the oversold, as you can see, just like we were back in the oversold in May 2023 and in August 2023. So there is still time. There's still time to buy. The halving is just a few days away, and after the halving, we might have another crash. And after that, it should be a clear path to a prosperous bull market. Thank you all for watching this video. Let me know what are your thoughts on Polkadot and on the market crash in general. Personally, I feel zero emotions. I've been in the market so long that these crashes don't affect me whatsoever. And if you get affected too much by your price fluctuations and your portfolios, just go away from the markets. Don't look at the charts, the portfolios, just stay away. If you can buy, make sure to take advantage, of course, not financial advice. Stay safe and take care.